Hello and welcome to another update video about AVAX. So far AVAX has not broken any support. However, it reacted to the 100% Fibonacci extension level. That's just obviously oftentimes an indicator that this was just another corrective rally. It's not a 5-wave move that happened here this last rally. So at the moment, I am of the view that this is simply still unfolding wave 4. Let me explain that. We talked about that in the last video anyway. I explained there are, if we are now testing the support again, it is entirely possible that this is just an overshooting B wave and we're coming down in a wave C like Bitcoin as well, of a wave 4 with support around $29. So basically the key support level here is $29.67 and $32.74. These are the two main support levels, and the support hasn't changed at all. Actually, if this is a high B wave, I will need to reduce it down a little bit, but it doesn't change much. So it's basically $29. That's support. Why? Because it's the 50% retracement level of the third wave. And only if this level breaks, we have a good understanding that this move up is over. Okay, that would be some kind of a confirmation level. Not really an invalidation point, but it is a solid confirmation that at least this move up has lost its impulsive character. Yeah, it can still move further than in a diagonal or something, but it certainly has lost much of its reliability then. So that's told you a lot about the risk. I mean, the support level really hasn't changed. Yeah, I've just moved it down like, 50 cents or something. But always keep an eye out on these support levels. And if you're too far away from these support levels and you cannot handle mentally a decline into support, because we always need to consider that within a scenario, a move down to support is possible. So that always tells you a lot about the risk and reward. Reward to risk ratio here is really poor, because literally the next target was at $54, and that's already an extended target. Bear in mind, my originally communicated targets for this move to the upside were $30 to $40, and we've never really sustained above 40. So anything above 40 is really an extended target and is sort of nice to have, right? But the risk has increased, also reward to risk ratio anyway. And if it takes, let's say from up there, 35% move to the downside to confirm that we are bearish, because that's what it is. It takes a break below $29 to confirm that, well, not bearish necessarily, but that at least this move up is over and we're looking for a deeper B wave pullback. This deeper B wave pullback should start at some point. But it takes a break below $29 to confirm that, right? And that tells you just a lot about the risk, okay? I've seen comments already of some of you who are panicking because of this move down, which is just sort of part of the scenario, okay? So that always emphasizes, when you feel uncomfortable about a potential drop, ideally before it happens, they might want to take some partial profits, things like that. It's always a question of reward and risk, right? So yeah, but the next move up is still possible to $54. It just seems like this fourth wave is still unfolding. That's one of the scenarios we discussed in the last video. The idea was, okay, ideally we move to 54 next. Yeah, even though it's not absolutely needed anymore because we already broke above the third wave high. We're already in an extended target range. Expectations of this move up are basically fulfilled, but the $54 level is still a likely projection as long as, and there's always a condition, the $29 level is holding. And that gives you a lot about reward to risk. So reward to risk ratio will get very favorable again if we really get into this box. Okay, because then literally we're like, okay, stop somewhere below $29, rally to 54, interesting reward to risk ratio, whereas up here obviously wasn't the best time to get in, where you actually have a reward to risk ratio that's really poor, not even 2 to 1, probably even worse than 1, okay? So that's what you want to avoid. I always aim for reward to risk ratios of, well, at the least 2, better 3. And in crypto, you often have the possibility of getting 10 or more, which is amazing. But then you need to watch for these deep pullback zones. So yeah, because the last move up was only in 3 waves, you see that here, A, B, C, in wave B. it is very likely this is just a C wave. Would also align with the Bitcoin. If we have a high B wave, then we can calculate some targets for the C wave. And that means that, we might not even go down into support. That's the problem with these high B waves. But there are certain projection levels to watch, okay? So obviously we've got $29, $31.80, and then $33.89 just as a level to watch. It's also the A wave low. There might be a bounce from there. And then $35.84 is the 100% extension level. Absolutely possible if this level is reached, it's over this correction, because an A wave and a C wave often have the same length. I always prefer the price to get into the support zone. Okay. Technically, for a wave 4, I don't always show it, but technically the 23.6 support or fib level is also relevant. That's at $35.71. But that's a very shallow wave 4 then. Yeah. Ideal target, typically the 38.2 fib. Extended target for a, I shouldn't say target, it's sort of support levels, yeah. They're not really targets, but in most cases, in a wave 4, these are triggered. And in most cases, it really is the 38.2 retracement level. So let's see if we see the C wave come down to the 38.2 fib. But the bottom line is that as long as the $29 level is holding, $54 are still a reasonable expectation. Even though this move to the upside certainly has done enough. It has already a full wave count. It doesn't need that one more extension. It is possible on the smaller time frame though. And I would be looking for it as long as we're holding above $29. Just note that the risk is obviously higher. Now as we're dipping into support, the risk gets lower again. And below $29, that opens the trapdoor into this area, yeah, between $12 and $23 basically, for a deeper pullback in a B wave. And if the pullback overall is corrective, it could set us up for a C wave rally into 2024 or early in 2024. That's my update about AVAX. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content every single day. You can find the links for those channels in the video description. Thanks a lot for watching. Bye-bye.